Listen, guys, I get it. The price of your house went up like 50% in the last few years, but you're maybe kind of falling behind on some payments, racking up some credit card debt, and as a result, your credit score has suffered. So now you feel it's time to finally tap into that home equity that you recently acquired in order to pay off some of that debt and get you back on the right financial path, and maybe even use that home equity in order to invest and build wealth while putting that equity to good use. But can you even get a home equity line of credit if you have bad credit? And even if you can, should you? Is it a good idea, or will it lead you to foreclosure and financial ruin and your family living on the street? That's what we're going over today. Let's get to it. What is up, everybody? Welcome back to the channel. If you didn't already know, my name's Jay Costa. I'm a real estate investor, agent, and builder here in Northern New Jersey. And if you get value after watching this video, please smash that like button down below and also consider subscribing. We are building a tight-knit community here of like-minded individuals looking to build wealth in real estate, specifically using a HELOC, a home equity line of credit. And I get plenty of questions from you guys all the time on whether or not you can get approved for a home equity line of credit with bad credit. I'm going to share with you the minimum requirements in order to get approved for a home equity line of credit, share with you whether or not I think it's a good idea to get a HELOC if you have poor credit, and what I would do if I was in your situation looking to use your home equity either to get out of debt or build wealth in real estate, or maybe a little bit of both. So first things first, let's go over what a HELOC is. A HELOC is short for something that's called a home equity line of credit. And a home equity line of credit is a revolving credit line based on the equity that you have in your home. And it's basically like a credit card, and you could frankly use it on whatever you want. But that's where people get into a lot of hot water using a HELOC, the home equity that they have, in order to buy whatever they want. And if you use it incorrectly, it's basically using your home as an ATM machine. We want to avoid that. Now, there's a couple things you need to know about a HELOC before you get started. A HELOC has a variable interest rate. So that means that the interest rate can and will change with the market and with whatever the Fed wants to do. So because of that, I don't see the HELOC as a long-term loan product. It's made to be short-term access to capital and paid off as quickly as possible. The next thing you need to know is that the way a HELOC works is that there's basically two periods. The first period is for 10 years, and that's called the draw period. That gives you 10 years to draw from the HELOC or pay it off as you see fit. And the required minimum payment for the HELOC in those 10 years is interest only. So the payment that you need to make does not bring the principal down. It just makes the payment to the interest only. After those 10 years, that's when you go into the repayment period, and that's when it kind of locks in with the balance that you owe, and it turns into a more regularly amortized loan where you're paying both interest as well as principal. So long story short, if you take money out of your HELOC and hold a balance for over 10 years, you do not know what the payment is going to be in the future because you don't know what the interest rate is going to be in the future. So that leaves you with some inherent risk that a HELOC has no matter what. So in order to reduce or minimize that risk as much as possible, I like to always use the HELOC short term, under, I would say, 2 years max. And lastly, a HELOC lender is allowed to call back that HELOC balance in full at any time. So you need to be aware that at any time the market conditions take a turn or whatever, the HELOC lender can say, hey, give me that 60 grand right now or else we're foreclosing on your house. And you need to know that as well. A HELOC does put basically a second mortgage, a revolving credit line on your property. And if you don't keep up with the payments, you will lose your home. Okay, so now that's out of the way. What are the minimum requirements in order to get approved for a HELOC? Well, I'll start with the number one thing, why you guys clicked this video most likely, credit score. First, the HELOC lenders are not subject to like strict rules and guidelines like a standard mortgage. So each lender for a HELOC is going to be different with their requirements. But generally speaking, the minimum credit score for a HELOC is about 620. So if you're like well below that 620 number, you may want to reconsider applying for a HELOC at this time until you get that credit score up. Second, you need at least 20% of equity in your home. So what is equity. So equity is the market value of your house minus what you owe on the property on your mortgage or anything else, and whatever you're left with is your equity. So if your house is valued at $800,000 and you owe $600,000, that leaves you with $200,000 of potential equity. Now, the reason I say potential equity is because HELOC lenders do not allow you to access that full $200,000. They use a calculation called loan to value. Most HELOC lenders have a loan to value of anywhere from 70 up to 90%. So let's use 80% as a good rule of thumb. And we'll use the same $200,000 worth of equity in your home. They'll basically give you access using a HELOC to 80% of that $200,000. Now, lastly, the HELOC lender will require you to have a certain debt to income ratio, or for short, we call it DTI. And this is exactly what it sounds like. It's the debt obligations that you have per month divided by the income that you have per month, and that's your DTI. That will obviously give you a percentage, and the higher the percentage, the more risky you are to the lender. The highest DTI requirement that I've seen is about 43 to 44%. Sometimes you can find up to 50%, but honestly, in this sort of interest rate environment, I'm finding it less and less common to find. Now, those are the minimum requirements to get a home equity line of credit approved on your home. So here's the main answer to the question: can you get a HELOC with bad credit? And simply put, if you're well below that 620 number, I would say the answer is no right now. Because unfortunately for you, the credit score of the applicant is kind of like the number one important criteria that a HELOC lender looks at when looking at a HELOC application. So like I said, if you're well below that 620 number, you may want to start just simply improving your credit score first and getting closer, maybe over 600, and then you could reach out to a HELOC lender and maybe start a dialogue. Now, should you get a home equity line of credit with subpar credit? Well, my answer to this is really going to depend on what you're planning on using it for. The two main things that people use home equity lines of credit for are either A, consumer debt, paying off consumer debt, which if you're going to use it to pay off consumer debt, that may be a viable option for you and a cost saving option for you, because let's say you have a bunch of credit card debt where you're paying over 20% interest on it, and you take that balance from the credit card debt and put it into a HELOC paying 10% interest, that's going to save you some money on interest. But you need to be super, super honest with yourself and ask yourself the question: if I do this, if I take that money out of my credit card balances and put it into a HELOC balance, where you have to be cautious and aware here, you didn't pay off anything. You just transferred debt from one place to another, paying a lower interest rate, right? When you see that $0 credit card balance, are you going to go start overspending again? Are you going to start racking up consumer debt again? Because if so, you need to avoid a HELOC at all costs, because that's just going to get you into probably financial ruin as well as foreclosure. Another way that people use HELOCs is to invest, and specifically invest in real estate, which is what we talk a lot about on this channel. But if you're going to plan on using a HELOC to invest, you need to know the fine print, what you're signing yourself up for, all of the risks involved with a HELOC, as well as the interest rates that you're going to be paying on this HELOC. So what are the risks that you're going to be inherently taking on if you have a home equity line of credit? Well, first, you are already in debt if you have, somewhat poor or subpar credit, and you're adding on more debt, right? So there's inherent risk right there. Second, you are going to be paying a higher interest rate on your HELOC than someone with pretty good to excellent credit would be paying. So you're going to be paying for this capital. So you better use it to your advantage in a good fashion. And lastly, the home equity line of credit is adding a second lien to your property. So you're putting your property on the line, the property that you and your family most likely live in. So if you don't make those payments or screw up in some way, you could lose your house. And you need to be aware of that. Now, after hearing all of the risks and the pros and the cons of a HELOC, specifically for someone with subpar credit, you may be saying, hey, that's too risky for me at this point. What are some alternatives? Well, the first alternative would be a personal loan. Now, personal loans do have much higher interest rates, but the trade-off for that is that you don't have to put your home on the line, okay? You're not going to lose your house if you don't pay the personal loan. Your second option could be a cash out refinance. I know you probably have a super low interest rate that we all got, 2.5%, 3%, whatever it is, that you don't want to give up. But if you're having trouble keeping up with the mortgage payments, with payments in general, you may want to get cash out of that property in order for you to pay off some stuff. Now, don't do it unless you know you can afford the new higher interest rate payment. And generally speaking, the lender on that refi is going to underwrite and tell you whether you can or you can't. That may be an option. As much as you hate to lose that all-time low interest rate, that may be an option for you in order to get back on the right financial track. You could also look at something that's called a home equity loan. Now, a home equity loan is similar to a home equity line of credit, but it's with a fixed interest rate for a fixed period of time. So at least it gives you some certainty compared to a home equity line of credit where it has a variable interest rate and you just don't know what the payment's going to be in the future. You also may want to look into simply selling your house. I mean, I know that can be tough at some point, but you could downsize, you could start saving money and get back on that right financial path by selling the house, getting money out, paying off all your debts, and kind of starting fresh. Lastly, if you're not in as dire of a situation as kind of what I just described, just start working on your credit. I know it seems fairly obvious and simple, but make sure you start paying bills on time, control your spending, keep it below what you're bringing in income. That is it for today, guys. Thank you so much for watching. If you liked this content, you will love the full HELOC playlist that I'll put a link to in the description box down below, as well as up here in the corner right now. But let me know in the comment section what you think. If you have bad credit and you want a HELOC, what are you doing in order to get to that 620 number? Have you had any success trying to get a HELOC with a credit score under that number? I would love to hear, your experiences and your thoughts down below in the comments and start a conversation with you. If you have any questions about HELOCs, drop a comment as well. You could also go on my website, www.realjcosta.com, and reach me directly right there. Appreciate you guys tuning in as always, and I will see you next time.